Hims stock is going to explode in July and August, and I'm going to explain exactly why. I also think Micron is going to reach $2,000 easily, and I'm going to go over exactly why I think that too, and then I'm going to go over my $100,000 challenge, week 56. Let's get into it. All right, everyone, so here we go with my weekly stock update. I'm going to go over why I think Hims will be exploding soon, why Micron is to $2,000 easily, and my $100,000 challenge, week 56. So please give a like and subscribe. It means a lot to me. So Hims stock first. Let's go over that. Hims right now, currently, it is June 27th. It's about $34. It went up 4% almost on Friday. So Hims, this is just a quick infographic of exactly what Hims represents, right? Now they have, let's go to the first one, direct-to-consumer healthcare leader. They're the access king. They are one of the best out there in telehealth, right? Unmatched direct-to-consumer platform and brand awareness. They're one of the biggest brands when you think of medication online, from weight loss and hair growth and all this stuff, you're going to be thinking of Hims, okay? Number two, expanding product portfolio, right? From hair, skin, sexual health, weight loss, mental health. They have a diversified solutions for multiple health needs, right? So they are all over the board. They got products for everything. Number three, rapid revenue growth and profitability. Now, first quarter, we are going to get into it. First quarter kind of sucked. And like I said, we're just going to kind of explain quickly why that happened. But looking forward, it's going to be a lot better, scaling efficiently, moving towards consistent profitability. Number four is personalized healthcare and technology, right? They have a digital first and AI-driven personalization, from getting your blood tested and using AI to really lock down who you are, what are the benefits, like what can they do to help you. So, and then they also have a very high customer retention, because you're getting details about your health and who you are, and you kind of just tend to stick with that person who has that information. Then you also have increasing lifetime value, deepening revenue streams. Oh, I got something in my eye. Deepening revenue streams per customer. So subscription revenue, upselling from, the Wegovy, right? You have all of that stuff. And again, future growth catalysts and partnerships, which prescription access, retail expansion, employer solutions, if employers want to use them as one of their medical providers. And then, like I said, the Wegovy, right? They didn't even put in here the international expansion that they are doing with Eucalyptus. So they are moving pretty quickly and doing a lot in this industry. The latest quarter, though, is what really hurt the stock. They got announced on, May 11th, and they missed terribly, terribly. It sent the stock packing down. That was good for anyone who didn't sell and maybe even bought some shares or just held on, right? Because it came back up. Now, on August 3rd is when they will be posting their next earnings. So this is going to be a huge date, because this will also be after a date for the peptide meeting, which we're going to go over. But August 3rd is going to be a huge day for Hims and the stock price, because that's going to be, they're going to be able to tell us now what has happened with Wegovy. How much has it improved what they are doing? Because the first quarter, they had to take out all their compounding GLP-1s, and they had to change how they did businesses, from their ads, the marketing, the lawsuit. It was just a different quarter than usual. So this next one is going to give a better insight on how things should be moving forward. So, and it still will be a little choppy, because again, they're just introducing the Wegovy. This is not just, but this is a different, the first quarter was bad. The first quarter was bad, and it's not an indication of how the business is going to be running. This next quarter will be a better indication. They didn't even start offering Wegovy till March 26th. The quarter was basically over by the time they even, offered it. Eucalyptus, right? That's a big acquisition, going international, Australia, Canada, Japan. It has, they paid $240 million. And it's going to increase their revenues and their brand tremendously. Peptides. So the FDA is going to have a meeting on July 23rd and 24th for 7 peptides that could be reclassified, allowing compounding pharmacies like Hims to manufacture certain peptides, so they can get a lot more testing done, and they can ensure safety for these peptides that people are really demanding right now. The demand is there, the supply is not. Right? You have to think right now, demand for these peptides is high, supply is low in terms of legit supply, right? There's gray market out there. There's people that are just selling the peptides, but it's not as good for you. You know, there's more side effects, right? A lot more risks. Well, this is, you know, if you can meet the demand and there's little supply, you know what that means for the people who have the supply? Money, right? Money. So hopefully Hims can capitalize on that. Right now, the current peptide market is undergoing a massive gold rush. Over the next 10 years, it's expected to more than double. Right now, it's between 80 and 140 billion, and in the next 10 years or so, 295 to, so about roughly 300 billion by 2033. So that's a little bit over a double up, right? To the highest estimates right now, 140. And again, because it's a gray market, right? It's still a gray market right now. So they can only estimate about the ranges between 80 to 140. That's a big range, right? Because, well, there's no legit sellers of peptides. Barclays also issued a major price target update. They now have it set at $39, which is still significantly higher than today's price. But going from 29 to 39, well before it is even close to 39, is a sign that Barclays thinks that this stock is going to move. One more thing, Hims did do a convertible debt offering. It said proposed 300 million. It actually went up to 400 million, and this kind of made the shares fall. Right here, shares fall 4%. But let me explain exactly what it is. You have to think of this deal as Hims taking out a special kind of loan from institutional investors. So Hims borrowed 350 million. It actually went up to 400. The interest, Hims is paying 0% on this loan. They don't have to make regular cash payments to the lenders. Instead of getting their money back for the, you know, whoever the loan, you know, the people who lend Hims the money, they're not going to get the money back. Instead, they can just exchange it for Hims shares, right? Now, the catch is they can only swap it if Hims stock is over $29.53, which the stock at this time was well below that. It was at like 25, somewhere around there. Now it's above that. So they could technically right now exchange some of the, convert them, but they're not going to. Then if the stock stays below that, they typically are just going to get the cash. Now, you might be thinking, oh man, so if they just all of a sudden create all these new shares, that's going to really hurt me as a current shareholders, right? I'm going to go over why it's not going to hurt you. Why did Hims do this? They did it for the expansion to pay for the acquisition of Eucalyptus, and then also technology to invest heavily in their AI capability and in fulfillment infrastructure. Now, protection against dilution. Now, this is what's going to happen for all of our current shareholders for Hims. Hims used some of the borrowed money to buy capped calls. This is a complex financial tool, but you can think of it as dilution insurance for current shareholders. Now, the problem is obviously if the stock explodes and the lenders decide to exchange the value of their loan and all that for shares, now all of a sudden the value of our shares goes down because there's so many more shares on the market. But the cap calls will offset this dilution. They effectively raise the price at which dilution would hurt shareholders to up to $50.15 per share. So basically, the dilution is really not going to hurt anyone who is a shareholder up to $50. Now, the thing about that is some confidence. To say $50, up to $50 is not going to hurt. That means Hims thinks, and remember, this loan expires or matures in 2032. They think that the stock is going to reach at least $50 by that point, right? That's in 6 years. Now, it's less than a double up, so it's not crazy, but they have an insurance on it because they think it's going to be more than that, right? So what this means to you as an investor, well, the short term, obviously the stock price slid a little bit and investors are like a little bit of fear of dilution. But the long term, they get a massive pile of cash for free to grow the business. And if they use it wisely with the Eucalyptus, it can be very profitable and positive for the company. So that's what I think about Hims. I think it's going to be amazing, but it's going to take a little bit of time. August 3rd, earnings, and the end of July, July 24th, 25th, they're going to be doing that meeting. So keep your eyes open for that. Micron to $2,000 easily. Now, people might be looking at this chart and say, I think it's starting to overextend itself. This stock used to be around $100 and now it's at $1,100, right? It's gone up 1,600% since April of 2025. Now that was after, the big tariff and all that stuff, right? The announcement from Trump, but still even at that, it was at what, like $70, $80? It's gone all the way up to $1,100. 1,600% since April of 2025, right? Well, to get to $2,000 from here, you need about 75%. It needs to grow 75%, which obviously isn't that much compared to what it's grown before. But when you look at this chart, you might be thinking like, that's insane. How could it get to $2,000? I mean, that is such a stretch. Like, this stock has to stretch so far, right? Well, first of all, let's look at their earnings. They just released their earnings this week. Crazy. The revenue went up 203%, and the cost of goods only went up 14%. Think about that. Last year, they made $26 billion and had to spend $16 billion. This latest year, they basically made $79 billion and only spent $18 billion. They spent $2 billion more, and they got $50 billion more in revenue. I mean, that is insane return on your investment, right? If you were to do that. Operating income went up 809%. The net income went up 786%. Let me get in a little bit closer on this, right? And then the EPS went up 776%. I mean, when you look at these numbers, this is the revenue, cost of goods, what is this? The operating income, and the net income, and EPS. I mean, this is just magnificent. Magnificent numbers. You cannot beat them. So I give them an A+. Unbelievable. Now, let's go back to this. You see the revenue growth, 200%, right? 200%. Their net income and their EPS, look at this, 700%. Right now, it's not going to grow at that rate every time. It's not going to grow at that rate, right? Let's be very conservative. Let's go 10% revenue growth, 10% net income growth, okay? And just a 20 to 30 PE, which they're still not even close to. But you could say that they maybe deserve a 20 to 30, right? Let's just go to the lower end, 20. 10% revenue growth, 10% net income, and look at the number that I will have by the end of 2030. You have 2,500 up to 3,800. This stock can easily reach 2,000 by 2027. And if it continues to grow at just a 10% rate, just 10% from here, easily $2,000 stock. I mean, I understand they're very cyclical, right? These stocks move in cycles, and so it's going to be interesting to see how it performs and how it actually does. But if all they have to do is grow their revenue at 10%, well, look at these numbers, you know? I mean, look at that, and then you just look at, okay, well, they were, oh, wait, what happened? Oh, there we go. You know, they've been growing their revenue at 200%. I mean, all they have to do is make this 78 in 1 year. That has to just be 90. That's it, 90. That is completely, yeah. The 47 billion just has to go to about 52 billion. 51, 52 billion, that's 10%. They're going to hit these numbers. They are going to hit these numbers, and this stock will be this price. It deserves to be about this price right now, right? And then again, like, this is just at a 10% clip. Of course, this number is really close because it's grown so much, and so this is where it kind of deserves to be. But again, if it just grows at 10%, even from here, you know, so it's pretty unbelievable on what Micron has done and what it can still do. So, stock market update. Let's go over this really quick. Here's the S&P 500. It has been down 3% since June 2nd. It's up 16% since March 30th. So June has not been a good month, right? We're basically at the end of June. We might have another day or two of trading, but it's been a bad June. It's been down 3%. The Iran-US deal kind of fell through a little bit. They've had more strikes and stuff. So, you know, what's going to go on with that? We had this big boom, right? Oh, okay, the war is not going to get any worse from here. And so the market just shot up. And now we're kind of getting back into like, okay, now what's actually happening? This truce, this meeting, this agreement is not really happening. NASDAQ, as usual, is a little bit worse. Down 6% since June 2nd, up 21% since March 30th. So again, very similar, you know, up and down kind of chart. They kind of always will, but the NASDAQ will be a little bit more extreme, a little bit more, right? A little bit more to the upside, a little bit more to the downside, but Regardless, down 6% in June, so June has not been a good month for most investors. Now, AAII Sentiment Investor Survey. So we have about 45% of investors, though, thinking now bullish. This is typically how it is. You have the AAII Sentiment Investor Survey, which these are some pretty good investors who understand the market, and now they're feeling bullish on the market, right? Doesn't mean they're always correct, but they're feeling bullish, and this is the lowest bearish number we've had now in the last 4 weeks. We are still above the historical average. We're above on both. We're above on the bulls and above on the bears, well below on the neutral, right? People are thinking either bad, we're in extreme mode again, right? We're back to I'm either on one side or the other. I'm not going to be kind of neutral. So that's where we're at right now. But we're in extreme fear when it comes to the emotion of the market, right? People are being a little concerned of the war, and it's a little bit overstretched. And Micron's gone up so much, and SpaceX, right? SpaceX has kind of driven a little bit of fear, excitement, and yet fear. People are like talking about like, oh, SpaceX is such a good company and all this and that, and yet people can't stop talking about how it's probably not the best time to invest in it, even though indexes have to invest in it. So it's just kind of a weird dynamic that we have going on with SpaceX right now. Plus, like I said, Micron, we got all the chips kind of in the memories. They were boosting up forward, and then they kind of pulled back a little bit. And, Micron's earnings is just another proof of nothing's really slowing down for them. It's not slowing down. And like I said, just a 10% per year growth from here puts them easily at 2,000. Easily at 2,000 by next year, which is amazing. Let's go over the next earnings for next week. Really, nothing. Right, we are done with earnings, but we do have Nike. So hey, we have Nike. There we go. We got Nike, right? I don't own Nike right now. I think if you were to try to look into a 5, 10, 20 year long investment that you can kind of sleep on, maybe Nike would be good, but Nike hasn't performed very well. They've had a lot of changes up at the top in the front office. In administration, and their turnaround story has not happened as well as I thought it would, and other people too. So I'm staying away from Nike for right now. My $100,000 stock market challenge, week 56. So let's get into it. I actually did not do this video last week. I have been crazy. I've done 2 weddings, a musical event. One of the weddings was in Santa Rosa. I'm working World Cup right now, so I don't even know how I'm getting this video done, to be honest with you, but I'm pushing through. So I'm a 100K challenge. I'm at $9,701. I was down negative 4.72% for the week. Last week I actually did well. I was up about almost 10%, but then things kind of dropped down. As you can see, June has actually been an okay month. I was at 9,145, and now I'm at 9,700. So June itself for me has been okay. For the overall market, not so great. My goal was to be at 12,000 by now, so I'm about 19% away from that, which is not great. But as you can see over here, I was, this was April 10th. I was 30% away from my goal, right? And then I got within 15% of that goal. So it's a long-term game. I also started this challenge when HIMS was in the 50s, so I understood that there was a chance that it was just going to be a hard goal to reach short-term. I'm not going to be able to get this verse goal to this in probably for another year or 2. But I'm okay with that because I'm good. Long-term thought process on this. Since I started the challenge, I'm up 32%, but if you take away all my $50 deposits, I am down 10%. So again, that's with HIMS going from 52 to 33, right? That's a big drop. So, and that was easily my biggest position. TQQQ has obviously helped to kind of keep that up. Celsius has actually gone down now. Celsius I bought and it was up most of the time, and now it's actually gone below, so I'm in the negative for that, which is kind of amazing. That's going to be a good one. Celsius is another good stock I really believe in. So this is my portfolio right now. I got HIMS, TQQQ, Celsius, Meta, Amazon, Salesforce, Micron, and ServiceNow. I bought a little bit of ServiceNow. Let me see. Yep, I bought some ServiceNow right here. I bought 1 share at $94.83. I also had some Meta dividend, and I have it reinvesting. I probably should change that because it's such a little amount, and I'm getting such a little amount in Meta where I could just put that money literally into $1 into Celsius is probably going to be a better growth for me anyway. But I might need to change that. But I did buy 1 share of ServiceNow. As you can see, my cash is at 119. So it's not very high. Depending on if there's a market correction, I might dump a little bit more cash in here. But for right now, I'm still just sticking to the $50 a week. The 1 week performance hasn't been great. TQQQ went down about 13%, Salesforce went up 4%, and ServiceNow went up 3%, but that's about it. Everyone else has been down this week, so it hasn't been great. And you know, when you look at the total change, Celsius is down 15%, Salesforce down 13-14%, and ServiceNow about 3%, but I'm absolutely okay with all this. Meta is almost down actually. But I believe Celsius is going to shoot up like a rocket. I'm so tempted to buy more shares at this price, but I already have a decent amount. You know, it's weighted in my portfolio. But, I mean, HIMS is at 25. I mean, I'm up 50% on HIMS, so that's kind of why. But, you know, so if I was up 50% on Celsius, I think, if I down 260, the value is about 50. So I put about 1,700 in. 800, but about 15. So I have about 1,500 in HIM, 1,700 in Celsius. So my cost basis, my initial, my actual investment into those is roughly the same. So that's why I'm just keeping that at that. So I'm just going to be right now basically building on ServiceNow and Salesforce, trying to get these weighted up. I know Micron, I'm already up 55%. It's already my number 2 position in terms of the total change, right? I have TQQQ, but then Micron. I do believe it is going to be cyclical though, and I want to be buying stocks that I feel a little bit more comfortable holding on a 5 to 10 year term, because this challenge is more long term for more people that you can invest $50 a month and do something like that, and then just be able to do something with it and invest it without having to constantly think about the markets and all that, right? Hey, you're going to put some money in and you're going to let it ride for about 5 or 10 years. It does take a little bit of research on who you want to put that money into, but then once you figure that out, I'm just going to start doing it. As time goes by, my portfolio will be expanding because at some point Salesforce and ServiceNow won't be as good of a buy, right? Celsius, HIMS, I'm basically done buying. Amazon and Meta, I'm not really going to be putting into. TQQQ has to go on a massive crash for me to put money into that. And Micron, I might put a little bit more money in. I might get my total up to, my whole investment, about $500 into it. I think I'm at 300. But, it is what it is. I don't know exactly what the next stock is going to be. It's possible Netflix is going to be involved in this. I really like Netflix. The stock has just completely crashed. I was looking at it when it was at 90, and then it's crashed now in the 70s. So I'm very tempted to buy Netflix. I've actually bought my kids some Netflix, and I bought that when it was at 90. So yeah, that's where I'm kind of planning to be. Thank you for watching. I really appreciate everyone who watches. Please give a like and subscribe. Yeah, it's been a crazy week, crazy month. It's a crazy month for me. June has just been an insane month for me. So I'm hoping to get a little bit more back on track. I've made only 6 videos maybe this month or something, but I'm going to get back on track over here in the next months, and things are going to get a little bit better. But nonetheless, never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.